Now, the US held off from calling China a currency manipulator in an attempt to avoid escalating trade tensions further. Meanwhile, Beijing is preparing to use its control over rare earths as a trade war tool, according to Chinese media reports. This sent rare earth stocks sharply higher. Elsewhere in China, the PBOC injected 250 billion yuan in market operations. That's the most since January 2017, after the government rescued Baoshang Bank on Friday, sending borrowing costs higher. Joining me now to discuss is Marc Ostwald, global strategist at ADM ISMI. Right, so plenty to digest there in terms of China. Let's start with the trade tensions. Do you think the rare earth is going to be the new battleground then?
I think it's not quite the tool that the Chinese would like it to be. The primary problem with most rare earths is they do take a lot to produce. They don't come in large quantities, and therefore your return on investment is actually quite low, so your margins are quite low. But that's not to say that everyone else couldn't actually start to produce. If you basically push the prices that much higher, you're going to improve mine. And indeed, in places like the US, they are starting to reopen old rare earth mines. So it's not really quite the instrument, but I think that this is more a signal thing. So we're basically traveling in the wrong direction still. Mr. Trump obviously the other day said the US isn't ready for a trade deal with China, and China is basically upping the ante effectively. So it's more about the direction of travel than actually what goes on in the rare earths part, though it is obviously going to give some support to that area.
So which direction are we travelling towards then?
We are travelling to escalation of a trade war. We are effectively in a sort of pause zone, because the next scheduled talks are between Trump and Xi are not due until the G20 meeting at the end of June. That's quite a long time away, and one really needs to watch the rhetoric that we've got out of both sides very, very carefully. And obviously in the meantime, what we're also seeing in terms of the global economy, particularly in all the survey data, well, not all survey data, but a lot of survey data, as we're starting to see this taking its toll, both in the industrial sector as well as the services sector, is genuinely starting to weigh on sentiment. I think where surveys before were probably just indicating a negative narrative rather than a real fall off in business, we are now starting to see some fall off in business activity, and that obviously has to be a concern for everybody. The other side of the coin to that is perhaps if we start to see a much sharper slowdown in the global economy, hopefully it forces both China and the USA, and indeed on the other side of the equation, the US and Europe, particularly in terms of auto exports, to the table to start negotiating.
So it's taking its toll not just on the economy, but also in markets as well. Let's have a quick check here on the China 300. That's the that's the CSI 300. We of course had this very, very impressive start to the year for global markets and Chinese equities in particular. But since sort of that mid-April time, we have seen a very significant pullback. I mean, if we were to extrapolate those gains across the first 4 months of the year, that we'd be talking about an incredible return by the end of the year. So is this pullback to be expected, and where do you think we go from here in terms of the markets?
Well, I think in all cases what one needs to actually understand is, that's why today's big 250 billion net injection, because there were 270 billion in total by the PBOC. The big rally that we saw at the beginning of the year was in no small part, A, because obviously Chinese shares underperformed massively last year. Secondly, because of the huge 9% total social financing boost that we got, 9% of GDP total social financing, plus all the big liquidity injections from the PBOC. They let up at the end of March, and since the end of March we've been trailing back. And then we had the sharp fall in the yuan, and that drove a lot of the people who chased the Chinese market back out of the market, and that's what actually drove the yuan move. Now, with this big injection, we're going to see whether this actually has a little bit of traction. Obviously, people want to know more details of just how bad the fallout from the Baoshang Bank failure is going to be. There's talk about a 30% haircut on debt repayments, which is, it's not severe by any historical standards when we're looking, but it's still quite sharp, and certainly something which the Chinese markets are not used to, and with the high levels of debt that there are in China, there are obviously concerns that this could be a ripple which might in the longer run turn into rather larger waves.
Well, that's what I wanted to ask you actually, was whether you thought, this Baoshang Bank is going to be the start of something more sinister across the financial sector. You mentioned those high levels of debt. Is this the tip of the iceberg? Are we going to see other financial institutions follow suit, and what could that mean for Chinese economy?
It's always 6 of one and half a dozen of the other with this, because what we've always been concerned about with China is every sort of bad debt situation has been effectively swept under the carpet via some form of manipulation by the authorities. If they've got a more proper, more suitable bankruptcy procedure now, and it's debatable whether this is suitable or not, then perhaps in a certain sense that's a good thing, because the more you clear out bad debt, you only have to look at Italy as a comparison to see how non-performing loans can cripple an economy. The more actively you pursue a policy of resolving those balance sheet problems on banks, the better. But we'll have to see how much willingness there is, because at the end of the day, if you're going to resolve those bad debts, you are also probably going to be closing down companies, which means a rise in unemployment in China, and that is something which the authorities, I doubt very much, will be willing to accept. But then you mount up even more debt, and you wonder how at some stage that pack of cards starts to topple over.